5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio right here on the web, followthemoney.com. So grateful to have you today. We're going to be diving into a very special podcast this week with a special guest. Precious metals advisor Tom Cloud will be joining us today on the podcast to discuss gold, and specifically gold investing in 2018. You know, gold is a very interesting topic. I've been personally a gold investor for many years, and we saw a major run in gold prices back at the very beginning of the new century, right at the very beginning of the 2000s. And we saw that peak out at about 2011. And since that time, gold has drifted down, just kind of back to earth. But it's still remaining in an uptrend. In fact, at the very beginning of January of this year, we issued a new uptrend alert on gold. So we are bullish on gold in 2018, and we've brought Tom Cloud onto the program today to give us his insights into the gold market. Tom has been in the precious metals market for over 40 years, and so he's seen a lot of different things over the years. And so his insights can be really helpful for those of us who like to invest in gold. By the way, Tom is going to be at the upcoming Follow the Money Summit 2018. That's going to be held in Fayetteville, Arkansas, May 25th, May 26th of this year. You can get all the details by going to followthemoney.com/2018 Summit. So gold, as I was mentioning, gold is a strange thing, isn't it? There's a certain kind of psychological feel that people have whenever they think of gold or whenever they hold gold in their hand. It's a very unique kind of property, a unique kind of metal that has always been used throughout history as a form of money, right? Or as a form of a store of wealth. In fact, if we go back throughout history, we find this to be the case. Let's just turn to the Bible, for example. The Bible in the Old Testament, if you split the Bible up into an Old Testament and a New Testament, in the Old Testament, which is written largely in Hebrew, the word gold appears about 389 times in the Old Testament. In Hebrew, the word is zahab, Z-A-H-A-B. Now, in the Bible, in that Old Testament, gold is seen as a form of wealth. Think of the great patriarch Abraham, who the Bible says was rich in cattle, he was rich in silver, and he was rich in gold. Gold is also seen as a costly gift in the Old Testament, often given to a prophet or to a king as a gift. It's also seen as the spoils for war, for the victor in the Old Testament, often seen in the battles described in the book of Joshua. In fact, if we go all the way back to Genesis chapter 2, verse 12, we read about God's creative works, and they're being described, and we read that God says, this creator God calls the gold that is in the ground good. He calls it good. Now, those of you who are familiar with the creation story in the book of Genesis, you know that God declares things to be good after he creates them. So it's interesting that that word is used of gold in Genesis chapter 2, verse 12. Then when you turn to the New Testament, you see that the word gold still appears. It is the Greek word chrusos. You spell that C-H-R-U-S-O-S. But there are only 10 instances of this word in the New Testament. While the gifts of gold were given to Christ by the Magi at his birth, most of the verses point to the utility provided by gold, the things that gold can do for you, the things that gold provides. Meanwhile, the word silver, which is kesef in the Old Testament, is used interchangeably as the word money all throughout the first part of the Bible. So whether we turn to the Bible or other accounts of history, we find the same exact thing. Since the dawn of mankind, gold and silver have been valued as a store of wealth, It's been viewed as precious and costly gifts and the preferred form of money by the people and governments alike. So enter our current modern era of paper money, which really began with the advent of receipt money, which we don't have time to get into the whole evolution of the 4 stages of money as they've evolved. But in essence, we have seen the rise of paper money over the last several hundred years, despite its creation maybe back at about 1000 AD in China. It's really gained traction over the last several hundred years. And it's, as of 1971, globally, it has completely lost any kind of commodity backing. So there's no gold backing the currency today. And that's really what drives, I think, a lot of angst in what you would say Austrian economics, and also many people who view themselves as gold bugs. They say, look, all throughout time, all throughout history, gold has been viewed as money. And now we suddenly have changed the game, and we're calling paper money, and that's just not going to cut it for the long haul. And I think they're absolutely right. I fall into the camp that says that gold is money, and gold should back up any kind of currency that we are using in our own communities. Otherwise, you just end up with monetary wizards who can print money at will with a printing press, and then, of course, you have all manner of inflation. In fact, just take a look at the fiat currency graveyard over the last several hundred years, and we will see that currencies do fail for a lack of backing of some sort of commodity. So on the other side of this break, I'm going to bring on Tom Cloud again. He's a precious metals advisor. You hear him every week right here on our podcast, providing the precious metals market update. We're going to talk about gold, silver, palladium, platinum, and Tom's views on where things might be heading as we head into the rest of the year 2018. And for those of you who like to invest in gold mining stocks, stick around after the interview. I'm going to name 3 of my favorite gold mining stocks that I think are poised to really break out once we see gold begin to really rally in the coming months and years. I think these 3 stocks I'm going to be sharing with you are certainly ones that I'll be buying, and I think they do have quite a bit of upside in the next massive bull market that we expect in gold. On the other side of this break, we'll be right back with Tom Cloud, Precious Metals Advisor. We'll be right back. Hello, friends. Jerry Robinson here from followthemoney.com. You know what? We have a very good special going on in April. I want to tell you about it. Spring is in the air. We're starting to get some nice weather finally as the gardens begin to grow. And we thought, you know what? Let's go ahead and have a 25% off for April only for all of our memberships. So whether you want to become a silver member, a gold member, a platinum member, get access to all of our research and our software and all the trading ideas that we put out on a regular basis, investing ideas to help you, and as well as our income university. Get access for 22 different income streams that you can create both now and in retirement. Simply go to our website, followthemoney.com/subscriptions, choose your plan, and when you go to the checkout, enter in coupon code April18. April and the numbers 18, and that'll give you an instant 25% off your entire year whenever you join with followthemoney.com. Go to followthemoney.com/subscriptions and join today.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Yeah, Jerry, it's great to be back on the show. It's been a while since we did an interview. Looking forward to getting everybody updated.
Yeah, I always look forward to talking to you, Tom, right here on Follow the Money Radio. We have you on every single week. Our listeners get to hear your updates on gold and silver, palladium, platinum, the U.S. dollar, the economy. I know many of them really enjoy those updates, but it's nice to sit down and talk occasionally, just back and forth and have a conversation. You know, when we look at the price of gold and silver, you know, we see a lot of consolidation in the prices, and I know many people have questions for you. We get questions for you about gold and silver all the time here, especially on our YouTube page where you do your weekly video. And by the way, before we get into our interview today, I'm great to have Tom Cloud on the line here. We want to let you know that later this year, May 25th and May 26th, Tom Cloud is going to be joining us at the Follow the Money Summit 2018 in Fayetteville, Arkansas. You can get all the details at followthemoney.com/2018 Summit. He'll be speaking there. He'll also be doing a breakout session for attendees. We'll talk about that in just a few minutes. But let's first, Tom, let's just dive in. We have a sinking U.S. dollar and gold that is just stuck underneath a stubborn 1350 to 1380 resistance, but it keeps trying to break out. Talk to us about what you're seeing on the gold chart, what you're hearing from people about gold from your own audience and also from your longtime customer base and from your suppliers. Just tell us what you're hearing about gold in 2018 right now.
Well, there's several things, Jerry. From a technical side, you've nailed it. It's stuck in a range. It can't get up above 1356. It stays in that 1320 to 1356 range, and it looks like on the surface that it's having trouble breaking out. But when you dig down a little deeper, in 2016, gold went up 9.9%. 2017, 12.6%. And so far up this year, 3% in 3 months. There's nothing else in the plus column this year in the stock bond. Silver's down a little bit. What we're seeing is a 1% steady up trend in gold. It's been going on for 27 months, and nobody identifies it. They want to talk about how stuck gold is and not look at what gold is doing. Now, what's going on in the buying side? We have some large institutional investors that buy from me, but they use timing services to tell them when to buy. And we've had some of the largest purchases literally in the last month we've ever had in the 42-year history of this company. So it's exciting, even though the volume in our business, number of sales is still down. People still don't know where to go. They're still uncertain. But the size of sales are at record levels that we're seeing, and of course we're talking to Singapore, Asia every week. We're on a call to Asia that we tap into with a company we're affiliated with, and premiums in Asia are much higher than they are here. U.S. is the cheapest place to buy, but we see that changing. And when we get to silver, Jerry, in a few minutes, remind me tell you a premium story that's happened in the last 3 days, but I want to stay on track. So anyway, I'm just sitting here, Jerry, thinking about all the gold that's going to need to be bought to back up cryptocurrencies backed by gold. And we're still hearing the Perth Mint, Royal Canadian Mint, and the Britannia Mint in England are still all on a time schedule to issue and offer a cryptocurrency backed by gold, not a fiat one like we see in the marketplaces today, where it's just based on confidence, but nothing to guarantee your value or anything. But and this is something I'm not saying very lightly. This is something that I have a lot of research on and know a lot about these companies where they're planning on trying to store it. So this is not a guess. This is a certainty. When that happens, you're going to see money leaving the financial system, meaning banks, and going to cryptocurrencies backed by gold that gives them a 50, 75, or 100% backing. So we're very excited about it.
Tom, when we look at the chart of gold, and we called an uptrend on gold, like some of those timing services you mentioned in January of this year. We haven't seen the full breakout yet. We're bullish on gold, certainly. We remain long-term bullish on gold, but simply from a trend perspective. In January, it gave us a new uptrend alert, which is fantastic. But think about this. You've been doing this for 40-plus years. You've seen all different kinds of markets, and here we have the last couple of years, we've had a soaring stock market, and yet gold continues to hold. It's not sinking. It's treading water. It's moving sideways. We have rising real estate prices. We have interest rates that are on the rise. We have lower unemployment. We have a higher GDP. We have wage growth that is rising. And yet gold stays still. It doesn't fall. What's supporting gold at this current time?
Well, I think it's central banks that have been buying. For 2017 is the first year in history where there were no sales by central banks of gold recorded, only purchases. And banks realize worldwide if they're not in gold, they're going to miss it, because the world with blockchain technology and everything headed that way toward gold-backed cryptos is just going to continue. And as I said, even though we feel like it's stalling, it's still moved that 27% in 27 months. That is undeniable. So you look at it, but we just think the underpinning now is that banks are going to scoop it on, and when it does start rising, they're going to start buying it faster, and that's when it's going to be hard for our clients to, get it at the premiums you can now. So as we've always preached, Jerry, the very first time we did a show is, we're into asset allocation. Gold and silver are a bedrock part of your portfolio, whether it's 5, 10, 15, 20, 25%. It's between you and your money manager, but you need to have it in there, and I have no doubt that it will be the best investment moving forward for the next 5 years, in my opinion. And we're just hearing stories of bigger and bigger purchases, and there's a deal being shopped in Dubai right now where they're trying, you hear about these things, but I personally know about this one through a very close ally, and that it's a many ton deal that's being searched for gold on delivery to Singapore. The buyer wants it delivered to a storage facility in Singapore. So these things are just picking up because they realize that gold is going to be used as money again, and probably within the next 12 months, you'll actually have gold back in the crypto, or gold back in the Chinese yuan, if they come out with a new gold-backed currency that's rumored to, is going to happen before June the 1st. So all these things are out there, and who knows when they're going to happen, but I feel assured they're going to happen from all the years of watching this when things built up and they happened. And certainly this is going to happen, and with the little amount of gold in the world, it's going to be something to behold when the price starts rising.
You're listening to the voice of precious metals advisor Tom Cloud. You can reach out to him at 800-247-2812 if you have any questions about gold, silver, palladium, platinum. He has been a dealer for more than 40 years, and you can find him online at cloudhardassets.com. Tom, before we turn to silver, because silver is really interesting on the charts right now, I want to stress something that you just mentioned, and that is that strong asset allocation. There's been many people who have entered into the investing game over the last couple of years as the stock market has broken out higher. Many of these are younger individuals who are just kind of learning to invest and learning to trade, and they may not be aware of how important it is to not just own one asset class, right? So you're not diversified just because you own some shares of Apple and some shares of GE, right? That's not diversification. Right. You've got to have something else besides paper assets. To that new investor out there, before we turn to silver, talk to that new investor who is just buying paper assets, and he doesn't understand why that's not diversification. Help him understand why.
Well, all you got to do is look. I just did a presentation for a civic club, and I pulled out 2 dimes and held them up. And I said, y'all know how much gasoline was in 1964? And a couple of them raised their hands and made guesses very close. But that year was between 19 and 23 cents. And that's what you paid back in 1963 and 4. And you're still paying just 2 dimes. If they're pre-1964 dimes, they're worth $1.25 each of silver, 90% silver. So what's changed, Jerry, is just the quantity of money that's been printed. You can sit here and say gasoline is still the same as it was in 1963. If you base it on purchasing power, and those 2 dimes will do it, and that's what nothing else has done. Gold, especially gold, has always been the thing that maintains. And the other thing that's important is the only investment that trades in all 27 world financial centers. The only one. That silver doesn't trade in every one of them. U.S. stocks don't trade in every one of them. They're linked, but But gold is traded in a market maker in every financial center in the world. So you can't take something that has a 6,000-year history of being money starting in Genesis chapter 2 and going till 1971 when Nixon freed and act like the last 47 years, is a new game in town. That is, you just print money out of thin air with nothing to back it. So they need something that's real, and certainly we've seen a lot of these investments go belly up through Ponzi schemes, and a whole lot of it, once again, had nothing to back it except that. And last thing I'll say is my wife wanted to watch this Tulip Mania show that Netflix just put out, and so we sat and watched it like 3 or 4 nights ago, and it was amazing to watch the Tulip Mania going on and how it started, but they made a real movie out of it. But I can just see that. I saw it happen in stocks. We were talking on this show, Jerry, not too long ago when price-earnings ratios on some stocks were 1,000 to 1, and the stuff that was normally 15 or 16 to 1 was 38 to 45 to 1, and trends don't change like that. That's all, speculation. It's not for long-term growth. The stock market had to come down. There was no way it wasn't going to come down. So I'd say those young people out there really diversify and buy investments that go up when the dollar goes down, because that's what I see for the foreseeable future, the next year or two.
Let's turn to silver for a minute. Silver had an explosive last rally. I mean, when we go back and we look at the last market cycle with silver, that breakout that really happened in 2010, last half of 2010, certainly into 2011, we saw silver prices hit $50 an ounce. We've seen since that time, of course, silver drift back lower. It's really been grinding sideways now, indicating that it's getting ready for a new rally. It's gotten so tight lately that it's just been really bizarre to see how tight the range has become. The price range has been on silver. It's still trading below our ideal breakout area on the technical chart of about 1850. Tom, we believe that if silver can break out convincingly above 1850, that's going to be the beginning. That'll be the very beginning of a major, major rally, very possibly. What do you think about that, 1850 on the chart? And also, what are your thoughts?
1856 is the number I use, so we're right there within 6 cents of each other, and I agree wholeheartedly. And I mentioned earlier, last week I had a client want 31,000 1-ounce silver maple leafs, and we had found one of the major wholesalers that had bought a lot more than they wanted to inventory, and we sold all 31,000 of them to one investor. And now today, and this was only last Thursday, from Thursday till today, I can't buy a silver maple leaf from any major wholesaler in the business for less than 25 cents more than I paid for those 31,000. The premiums in silver started changing 2 weeks ago, and you've watched the COT numbers. I sent that out in the mailings, the ones that get my free email. I sent it out where you could track your short positions in silver every Friday when they come out. All you got to do is click it and go to it. We've had 4 straight weeks where the COT numbers have fallen, which leads most people to believe that J.P. Morgan and other people that have been short on silver since 2011 for 7 years are now changing. And we know that J.P. Morgan has 168 million ounces in COMEX warehouses that are disclosed to the public, but there's a lot more they have that's not. So we don't know that exact number. But the point is, when J.P. Morgan or Goldman Sachs or any of these big market makers decide they want to run the price of physical gold and silver up, they're going to move, and silver's where they're going to do it, because right now we have an 80.5 ratio. I mean, that means that gold is 80.5 to 80.5 times more valuable than silver. And you can make a case, as I did 2 weeks ago on Jerry's show. You can go back and look at it on YouTube. And I went into the details of, is the real number going to be 50 to 1 when it settles, 32 to 1, or 16 to 1? And I give you a little teaser on this video I did 2 weeks ago that you can go to YouTube and watch. So if it goes back to 50 to 1, when gold goes from 1335 to 1500, like 15%, and they went to a 50 to 1 where it was most of the 2000 to 2011, it was around 50 to 1. If you go to that number, if gold got 1500, silver would be $30 to go back to a 50 to 1 ratio. So we know that the ratio is way out of whack right now. And what we're hearing is that any time that we're going to see J.P. Morgan and Goldman Sachs and these guys go long in silver, and when they do, it's going to be breathtaking, just like you mentioned, Jerry. And I remember in 2008 telling everybody I could talk to buy silver, and it was $9.12 and $9.50 and $12. And then when it got to $12, it went to $48 4 times in 30 months. 400% in 30 months. Started at $9.12, and it did touch 50, as you said, but it actually had a closing of $47 and change. So we do think this is going to happen. We think that Goldman Sachs, these big boys, are going to, make the decision to start it. And when that starts going, you're going to have the little guy and everybody into the market, and we're going to see silver do a breathtaking jump as I've seen it. When I started this company in 1976, I saw it in 80, and I saw it a few years later, and then I saw it again in 2008 to 2011 when it went up from 9-something to nearly 50. And we're going to see it again. The only difference this time is I really believe with all my heart that number is going to be $70 to $100 an ounce when it's through, because there's so much more physical fiat currency in the world markets than there's ever been. It's just way. No country can go on a budget anymore. It's now just how quick you print money to keep buying votes and keep your party in office. That's what the world's come to.
You're listening to the voice of Tom Cloud. He's a precious metals advisor. You can get the email blast that he referred to earlier by going to followthemoney.com/gold. There you can enter in your name and your email address, and Tom will alert you regularly through emails about gold and silver prices, specials, as well as education and news. Tom, turning now to palladium and platinum before we talk about the summit a little bit. Palladium, I have been so bullish on since the beginning of 2016, and we have seen that just over the last few months, we've seen a lot of price pressure on palladium. What's driving the price down, and is it a near-term phenomenon, or is there something more fundamental here?
Well, some things is easy. It ended the year at 1,050, and now it's down to 957, so it's had about a 10% drop this year, while gold's gone up 3% for the year. But a lot of it, Jerry, is just the overabundance of cars. We're starting to see recycling in platinum and the catalytic converters. It never was an issue when platinum was going from 180. Our clients were enjoying getting out of it around 1,000 over about an 8 or 9 year period. And you just saw the new cars, the catalytic converter. But now we're seeing, companies like Tesla come out with these energy-powered cars and electricity-powered cars, and you're just not seeing the demand for it. And then you've got such a bank of used cars in the world today. I saw the other day it's the largest number of used cars in the world. But as long as economies are still growing around the world, and especially in China, people want new cars, so that keeps demand on the palladium. But on the same token, and the major reason palladium has slowed down is there's been so much liquidation in the investment market, which only makes up about 25% of the palladium market. About 75% is bought for industrial purposes like the catalytic converter. So the investors right now are letting it rest. I know we've had probably 100 people get out of palladium in in the last 3 or 4 months, and they've either on the sidelines waiting on it to drop to get back in, or they've moved it over to silver or gold. But investor demand has really slowed in the palladium market because of all the uncertainty worldwide in the economies and trade wars and all that kind of thing.
All right. Well, for all of you listening, I want to tell you, as you know, Tom Cloud, he's been with us now for a long time here at Follow the Money, and we're very excited that we're going to be able to see him in the flesh. Those of you who come out to our 2018 summit, Follow the Money Summit, it's going to be held in Fayetteville, Arkansas, May 25th, May 26th. It'll be myself, Tom Cloud, Mike Mitchell. We'll also be joined by Trace Mayer and Steve Penny, and it's going to be just a really wonderful time in Fayetteville, Arkansas. Tom, you're going to be speaking there. You're going to be speaking from the main stage. We're expecting quite a few people there in attendance. You're going to be speaking from the main stage. You're also going to be doing a breakout session. Why don't you kind of let our folks know what you're going to be talking about and why they should be there?
Well, first of all, Jay, I just want to kill some of these rumors. I'm going to be talking off the stage. I'm going to be talking about some things we've talked about today, what happens to gold and rising interest rates. So it's probably been the best investment, and why. And we're going to talk, and we're going to punch the debt, the federal budget deficit, and every side. We're going to come at it from top, bottom, and each side. We get into real detail of where people can really understand why the dollar is going down and what the future looks like. I'll also, Jerry, be talking about an incredible out-of-country program that we'll be introducing shortly, just right after that, the first week of June. It'll be a program that only a few elite companies in the world are asked to be a part of, but we're going to be hooking up actually with a manufacturer, or one of the sovereign manufacturers in the world. So it's going to give a new interesting way to buy gold and silver, to have the most leverage with it still being all physical and not buying future contracts. And we're going to talk about the ratio of gold and silver. I'll talk in more detail, and how to go back and forth with buying gold and silver based on a 80 to 1 multiple down to a 50 to 1, and when it gets there, what do you do? And we're going to be also talking about some things that I can't mention about the storage of some of the gold cryptocurrencies, because we've been involved in on the periphery of a deal where there will be a very well-known major name company that will be part of a cryptocurrency later this year or early next year backed by gold, and we'll get in and discuss that. There'll be a lot of opportunity for people to come and hear things you're not going to hear on Jerry's show. I'm just not allowed to talk about them, but I can talk about them there in privacy. And certainly in the breakout sessions, for those that are interested in making gold and silver part of their asset allocation, we'll be talking about other things that, and it'd be me. I don't sell anything else for anybody, but I'll be sharing with my crowd what kind of things I'm investing in myself to diversify that I've never done on stage before, but I will be doing it this time and talking about some of the things I'm looking at and why.
There'll be a lot of exciting announcements. You want to make a plan, mark your calendars, May 25th, May 26th, 2018, the Follow the Money 2018 Summit right here in Fayetteville, Arkansas. It'll be a lovely little weekend for you to get away and learn a lot about the economy and meet people who you can network with. In fact, last time we did this, Tom, back in 2016 in Colorado, the relationships that were formed and the partnerships and alliances that were made were really what it was all about. I think that's really what this is going to be. Not only are you going to learn by coming out to the summit, but you're also going to meet people that maybe you never would have met before and make connections and be able to talk about your own business and bring your business cards to pass out. And be a great time. We're looking forward to it. May 25th, May 26th. Tom will be there. Myself will be there. Many others. Mark your calendars and go to followthemoney.com/2018 summit to reserve your seat. Right now, seats are completely free. That is unheard of. We're making the seats completely free, so if you want to take advantage of that, you might want to do it quickly while we still have room. Tom, thank you so much for coming on the program today. I really do appreciate all of your insights. In our final moments, if you want to repeat your phone number again and tell folks how they can hook up with you, why don't you go ahead and do that?
Well, just give us a call at 800-247-2812. We do have some good gold values that a couple wholesalers have give us some of their overage inventory to sell at discounted, like 2% below our normal price, so it's like getting it at my price almost. So we do that, and if you get Dan Scoggins and myself here, Dan's been with me nearly 24 years now, so he can pick right up where I left off if you need to talk to either one of us or Kathleen. Any of us here in the office can help you. So give us a call if you have questions. With no pressure. I can tell you there's no pressure sales from us, and they both work on salary and not a commission. So they're here to educate the clients.
Fantastic. Tom Cloud, 800-247-2812 if you want to talk to him directly. And if you want to sign up for our 2018 Summit, go to followthemoney.com/2018 Summit. Tom, again, thank you so much for joining me today. I look forward to talking to you again soon.
Hope so.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years' experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Would you like to generate consistent cash flow from trend trading? Would you like to learn how to cash in on the next market crash? Would you like to gain an ethical yet completely unfair advantage when it comes to profiting in the market? My name is Steve Penny, and I've spent the last several years learning directly from Jerry Robinson, and this week we'll be hosting a web event called Trend Trading Secrets, Consistent Profits Even If the Market Crashes. Go to followthemoney.com/free webinar to reserve your seat. Wall Street and the banking establishment want you to believe that you can't make money without them. Our community of successful trend traders would beg to differ. We've learned that having the right system, having the right tool, and having the right coach gives the advantage back to the retail trader and investor. We're doing it. We're beating Wall Street at their own game, and I would like to show you exactly how you can too at this week's web event. But you have to register your seat, and they are limited to the first 100, and they're filling up very quickly. So go to followthemoney.com/free webinar to claim your spot, and I cannot wait to see you there.
All right, friends, welcome back to Follow the Money Radio. I sure do hope you enjoyed that interview with Tom Cloud. And I do encourage you to go over to followthemoney.com/2018 and reserve your seat for this upcoming summit here in 2018, right here in Fayetteville, Arkansas, right here in the headquarters city of Follow the Money. And it will all be occurring on May 25th and May 26th. So go ahead and reserve your seats now. Followthemoney.com/2018 summit. You will definitely want to be there. Okay, now, in our final moments, I wanted to, as I told you at the outset of this podcast, I want to share with you 3 gold mining stocks that we personally like. They're actually part of our top 10 Smart Score ranked gold mining stocks. In fact, all of our silver, gold, and platinum members receive our Robinson report every single week, And in that Robinson report, we list all of our top 10 gold mining stocks based upon our Smart Score ranking. The Smart Score ranking is really a metric that we use, a series of metrics that allows us to focus on which stocks are actually getting money pumped in from institutional investors, the big money, right? Because you and I, as retail investors, we don't have the ability, we don't have the amount of money to drive the price of stocks higher the way that institutions can. Institutions are like an elephant in a bathtub. I mean, they literally cannot help but splash, and they cannot cover their tracks. So when big institutions begin to move into particular stocks, that can drive the value of the stock higher simply because they take some of the supply off of the market by buying shares, and they usually buy lots of shares. So let's get right to it. The very first stock on our list for the top 3 stocks that we want to share on this podcast for gold mining, for the gold mining industry. The first one is Gold Corp. Ticker symbol is GG. The company has been around for some time. In fact, it's all over North America and South America. The company is engaged in the operation, exploration, development, and acquisition of precious metals properties in Canada, the United States, Mexico, Central America, and South America. The company is headquartered in British Columbia, and it currently has 21 different analysts covering the stock, of which about 6 are issuing buy signals right now, or buy recommendations, I should say, on the stock. Another 8 are providing outperform recommendations, and 7 analysts are saying simply to hold. Currently, there are no sell recommendations by any of the 21 analysts that cover Gold Corp. Now, while the company is currently trading at about $14.44 as of this broadcast, the price target set by analysts is closer to about $18. So there's about 20-25% upside from here based upon the analyst view. We personally like the stock and think that it will do very well whenever gold really begins to break out from this sideways grind that it's been in. Although it's in a bullish sideways grind, we must admit it's certainly setting higher highs. It's still in a very tight sideways grind. So whenever gold really begins to break out, we expect stocks like Gold Corp to do well. So the very first stock here, Gold Corp, and the ticker is GG. And the second stock is called Royal Gold. It's a very unique company. It's a streaming company in the fact that the company does not actually operate mines. So it's a gold mining company that doesn't actually operate mines. Instead, what it does is it finances mines, and then it gets a cut of the production created from those mines. It's a very different kind of company known as a streaming company. Those of you who are familiar with Silver Wheaton, which has now changed its name to Wheaton Precious Metals, you might be familiar with that model. There's other companies like Sandstorm and others, but Royal Gold is perhaps one of our favorites in this streaming space. The company is currently trading for about $89.53. We believe that the upside on this particular stock could be close to $100 and even beyond once gold really begins to break out. Royal Gold, by the way, is based in Colorado. You can look up the company royalgold.com. There are about 14 analysts covering the company today, 4 of them giving a buy signal or a buy recommendation, 5 of them giving an outperform recommendation, and 5 of them saying to hold. But again, no sell recommendations by any of the 14 analysts who currently cover this particular stock. So we like Royal Gold going forward. RGLD is the ticker. And now let me leave you with our third favorite gold mining stock as we move into 2018, as prices could get higher, as we look at the current Smart Score rankings of all of our gold mining stocks. The third stock we will want to talk about today is IAMGOLD. That's ticker symbol IAG. This one is certainly the least expensive of the 3. This one currently trades for about $5.35, and the company is drastically trading below its historical multiple. Right now it's trading at about 50% below its historical multiple based upon its PE ratio. So it's really beaten down. Currently there are 16 analysts covering IAMGOLD, 3 of them giving buy recommendations, 6 giving outperform recommendations, 7 giving hold recommendations, but again, no sell recommendations on this particular stock. And in fact, if you take a look at the analyst price target for this company, IAG, you will find that they have a price target of around $7, which indicates about a 33% upside just to get to the price target set by analysts for IAMGOLD. The company is a mid-tier gold miner based in Toronto, and the company, again, is probably one of the cheaper ways to gain access to the gold mining rush, inevitably, that we will see as more people realize that the emperor has no clothes, that basically everything that is happening here in 2018 is really being financed with a credit card, right? And eventually the bill is going to come due. And as rates continue to move higher and as the financial pain begins to come upon not just the United States but other countries, gold is going to, once again, play the hedge that it has so many times before. And in such a situation, companies like IAMGOLD, I believe, are going to profit from this rise in gold prices and deterioration of the overall general economy. So there you are, 3 stocks we have our eyes on in 2018, gold mining stocks. That is Gold Corp, ticker symbol GG, Royal Gold, ticker symbol RGLD, and IAMGOLD, ticker symbol IAG. I encourage you to check those out. Of course, do your own due diligence, and never, ever buy any stock based upon an AM radio or podcast interview or whatever that you're listening to. Always consult with a trusted financial advisor before making any financial decisions. Well, all right, friends, that brings us to the end of our program. Thank you so much for tuning in and joining us each and every week right here on this broadcast. And as always, I'd like to leave you with a final word, this time spoken by the very famous Walt Disney, when he said, "The way to get started is to quit talking and to begin doing." That's just something to think about. Remember, friends, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.